Cool, cool, cool. Well, happy Friday. Happy Friday. We are live. Hello to everyone who is watching us on Facebook, on YouTube. I am Keisha. I am one half of the hosts of the Regal Mindset Podcast show. I will go ahead and turn it over to Joy, and then we'll introduce our guest.
Thank you so much. Happy Pride Eve. We ready to kick this thing off. I am Joy, the coach. I'm your millionaire, your mystic, your mindset transformer. I am the other half of Regal Mindset, and we're talking about all things money. Are you excited? Because money makes me excited.
Very, very excited.
Money, wealth, all of it. I'm excited, and I can't wait for to let our guests loose. So we're going to give you opportunity to introduce yourself, and we're going to go ahead and get this party started.
All right, thanks, guys. Thanks, Keisha and Joy, for having me on the podcast here. So my name's Ashley Young, and I work in finance. I'm a financial broker here in Columbus, Ohio. What I do is teach people how to save money and make money, doing things like getting you out of debt faster, investing for retirement, properly protecting your family with life insurance, and so much more. So we're going to talk about it all today.
Oh yeah, because we need this. You know, I'm a very direct to the point type person, and it pains me to know how many people are walking around uncovered, unprotected, are not circulating their money in the correct channels, and not taking advantage of products that will help them in this life, the next life, and their children. You know, every now and again, I got to throw a Bible verse out there. It says, a
Give
good
it to
man,
us, Coach.
listen, a good man leaves an inheritance to his children's children. So it's our job, even if you don't come from money, doesn't mean money does not have to come from you. And so we have to position ourselves to be that financial foundation for our upcoming generations. It's your job. It's to be a good person. It's to establish yourself. So Ashley, tell us, let's go into life insurance.
Sure.
Give us the breakdown of life insurance and give us some various life insurance products that will expand our knowledge.
Okay, yeah, definitely. So, life insurance is something that everybody needs, right? Any type of insurance is designed to protect you, right? In the event that something happens. We have car insurance. We know what that does. We have life insurance. Obviously, unlike car insurance, if something happened to me, it doesn't replace my life, but what it is designed to do is replace the income that I was bringing into the house, right? So everybody needs enough coverage for three things. First of all, it pays off your debt. All outstanding debt, when somebody passes, that gets transferred to next of kin. It's got to take care of your funeral costs, of course, right? But really, you've got to give your family enough to live on for the years to come. So it's recommended that if you have children at home, you have 8 to 12 times your annual income in life insurance, and 4 to 6 times if you don't have children, right? A lot of these, when it comes to your specific products, obviously there's term, there's whole life, and there's all kinds of other crazy products out there, right? What I will say is, definitely, if you hear these words, a red flag should go off in your head, right? If you hear cash value, whole life, permanent life, universal, variable, indexed, or infinite banking, all those should be like a warning to you. Typically, those are products that are going to be too costly. And living benefits aren't exactly what you might think. So it takes the average policy years to accumulate any kind of cash value. And typically, those rates of return are really low. So experts recommend that you buy a term policy and invest the difference. So when you have term coverage, you're going to get much higher coverage at a much lower rate. And you can take that money you saved because you're not paying for something expensive, and you can put that into a separate investment account that's going to grow at higher rates of return. So,
Got it.
yeah.
Okay.
So how would you how would you position that for people who don't understand investment accounts, because they're thinking, oh, let me get this term policy. I'm paying $15 a month. I got 150,000 to for 15 years, knowing good and well you're gonna outlive that 15 years. Somebody done gave them a low rate, low, Globe Life, Gerber Life policy,
Mhm.
and now they're like, okay, what am I gonna do with the difference? What does that investment looks like?
Right. So the goal of term insurance is to cover you for that period of time until you become financially independent. Now, let's talk about financial independence, because I don't
Okay.
know that everybody understands what that really means. So to be truly financially independent, that means that your passive income can pay for your living expenses, right? Everything that you earn yourself is just extra, right? So until you become financially independent, you need to be protected. So somebody who's younger, who has kids at home, children are liabilities. Let's face it, they don't make any money. So if it doesn't make you money, it's a liability. So
Mhm.
you need to have more coverage and give your assets time to grow. But as time goes on, your assets, they're going to grow. The kids are going to be grown, they're going to move out of the house. And then that's when the need for life insurance goes away. So, as long as you are planning and doing everything appropriately, life insurance isn't designed to be till you're 100 years old, right? It
Mhm.
Mhm.
is designed to be temporary. This is why term is, along with planning, is most appropriate. I'm sorry,
Understood.
did I answer your question?
No, you did. You did. I got a couple of follow-ups, but I know I see Keisha's wheels turning. Yeah.
so so all of that makes sense for me, right? But I
Mhm.
also feel like just like investing, it's important to have a portfolio, a variety of things. And as
Mhm.
you mentioned, like there's you can have a term policy, and you can have other things to offset that.
Yeah.
Um, Thinking along the lines of what Coach Joy said, you want to be able to leave some things behind for your family. Is there such, well, I know, I feel like there is a such thing as being overinsured, right? Um, or
I
is there a
mean,
such thing as being overinsured?
I would say it depends on the person, not
Just make
necessarily.
sure you don't
Because
overfill it.
you know what
There's a
yeah,
line called max.
well, what it depends on the person. I've never heard of any life insurance agent taking a death claim to a family and them saying, "I wish I had less," you know? So,
Okay.
uh, I mean, at that point, let's say you've got $2 million in life insurance. The rest of that can be used to create generational wealth. So no, I don't think there is too much. If somebody wants to buy that much, that's great. They're really,
Right.
like, really looking out for their family.
I think I was thinking along the lines of, okay, having one policy here. While I was prior military, so I have that policy, or the policy for veterans. Then I have a policy for our home. Then I have policies with banks and with my a few different policies. So, and at one point, I really thought, well, maybe is this all necessary, right? I don't want my wife to have to worry about things, but I also want to make sure that she is savvy and she's using it wisely so that it lasts her a while.
Yeah. Well, first
So,
of all, that's amazing. I'm sorry, I don't mean to cut you off, but
oh no, you're fine. Yeah, go
yeah,
ahead.
that's amazing that you wanna have her so set up like that. Not a lot of people are doing that. So,
Mhm.
first of all, congrats to you. And then when it comes to BGLI, which is what you have as a
Yep.
veteran, yep, that's great. They can sometimes offer really great benefits, but I would say, you know, take a look at all the other policies and programs
Okay.
that you've got, and maybe you could essentially find one thing that adequately meets your needs and costs the same or less than what you're currently doing. So,
Right.
yeah, I mean, heck, we can get together and take a look at everything too. You
Yeah.
know,
Yeah. Yeah.
you may
Okay.
have
Yeah.
what's best and you may have room for improvement.
Okay. Yeah. Absolutely. Jay, you had a question?
I do. So I'm going back to your original statement. Why would those products be a red flag?
Mhm. So typically with anything with cash value attached to it, you're going to pay a lot, right? Those premiums are really high, and typically not enough coverage. So you'd be paying too much for inadequate protection. Um, I've seen people with $1 million term policies, but I've not ever seen somebody with $1 million whole life policy, and I can't even imagine how much that might cost somebody. Um,
Mm,
so, and I mean, when it comes to things like the indexed universal life, I feel like you really have to find the facts. The facts are not in places like TikTok. um,
Mhm.
Sorry if you go there for all your information, but you've got to look at what the experts are saying, right? Forbes, and people from nonprofit, the Center for Economic Justice, things like that. IULs are typically, in particular, sold with false promises. Some deceptive marketing tactics are being used. Um, and at the end of the day, your policies are going to be inadequate. You'll end up with little to zero cash value, which is why if you really want
Shut up,
consistent
Jackson.
um, consistent coverage and at a low rate, and your investments, they need to be separate.
gotcha. You know what? I want to echo that just as a transparent moment. TikTok definitely got me.
It
I,
gets everybody. But let me tell you, I saw this guy on TikTok, right? He was like, "Oh, it's infinite banking, right? So you take your money here," and then he's drawing this diagram, and it was so hard to follow. He's like, "So then essentially you're your own bank. You're borrowing from yourself. You're paying yourself." And like it literally looked like, I don't know, like a Star of David. It was crazy.
Yeah.
And at the end of it, I was like, you know what? If it's that confusing, it's probably confusing for a reason. So.
I know we had a conversation about it, and I think I remember correctly. It was a while ago, and I told people, I said, now I have a plethora of products, so I'm across the board. I got whole, I got term, I got multiple terms, whole, I got IUL. I have it. I have a plethora of products, but I made sure I did my research to make it sure it made sense and works for me. And
got you.
and then too, you also got to make sure that your net worth match. Like you said, what's the point of having $1 million term policy and you make $19 an hour? That doesn't make sense. So anyway, one of the TikTok myths about that IUL is, oh, you could borrow money. They're not thinking that you have to put money in it to borrow.
Exactly.
And I think that's the first step everybody missed. I'm like, dude, you're not going to be able to get a $500,000 IUL. You're paying $400 a month. And then you think within 6 months, you're pulling. That is not how it works. When Waka Flocka was on there talking about it, he left out that part. He said he had $1 million
Yeah.
IUL and he
Yeah.
learned these tactics. He didn't tell nobody. I put $1 million in there to match it. So then, therefore, I can allow whatever the stock market is, the rate is, because it starts out at a low, I think the 0.25 or 0.75. That's the absolute guaranteed low. But it can go as high as 12. It has never went over 12%. So you have to be wherever that market value is. So yes, Flocka, you put $1 million in, you have $1 million worth of cash value that you can consistently pull from tax-free, and you have a face value of $1 million. You didn't tell people that. So everybody thinking, oh, I'm just pulling. That is not how that works. It's like a safe savings account. Put money in and let it grow and come back. So I think, like you said, TikTok miseducates a lot of people. I appreciate the fact that it allows people to get some introductory but
Yeah.
to
The
this way,
possibilities. Yeah.
yeah, 13 ways, So yeah.
Yeah. And what a lot of people also don't realize about borrowing their money. So, first of all, it's your money that you
Hmm.
have
Hmm.
been putting in and saving. Um, and you're getting a lower rate of return than you would in, let's say, a Roth IRA, right? You're getting a lower rate of return. Now, let's say I got $50,000 in my cash value because I put it all in. Well, I want to take that out. I have to pay it back with 6 to 8% interest.
Mm.
Have you ever borrowed your own money and then give it back and had to pay interest on it? No, it doesn't make any sense, right?
That's how them 401ks get you.
Yeah.
Yeah, there's
That is.
early withdrawal penalties and things like that. Yeah,
Like how you take a loan out against your 401k and you're like,
Yeah.
so I'm paying myself back with interest? No, I
Hmm.
ain't paying you back. I just took it. It's mine.
right.
No,
But yeah,
absolutely right. I'm sorry, Ashley. I didn't mean to cut you off.
no, go
I
ahead.
was just gonna add that yes, you're absolutely right, Jay. There is a way that you can loan or borrow money from yourself, and you do have to pay it back. I could say for me, when I did it through, I think TSP, which is thrift savings plan, it was at a really really low interest rate, and I
Hmm.
did it for I think I did it to buy the house. I think it was some closing costs or something that wasn't included in my BA. What anyway, something like that, but it was very, very low. Um, and then you can, pay that off early without any penalties or what have you. But like you said, the TikTok miseducation,
Man,
you definitely have to do. They got me for a couple months, and I was thinking like I did it for business purposes, right? So I got this not a loan. I got this index policy, and like you said, you have to match that. Well, okay, yeah, I can give you some money, or I could take some money. They even convinced me I could take money out of my or stop my TSP, which my company matches, and put it in there. I'm like, wait a minute, man. No,
right.
the math ain't math. Like, no, no, no. So quick, they didn't give me but a couple months. They had a couple payments from me. I was like, nah, this ain't what I need. So and I canceled it. But yeah, absolutely. You got to do your due diligence. So
Hmm.
you learned that from us. You learned that from here.
Right.
Uh,
Right.
the next thing I want to get to, Ashley, if you can help us kind of navigate, a lot of people, I feel like, don't really understand the severity of having a budget. And again, another transparent moment for me. I feel like because I have money that that I'll say disposable, I should be able to spend it, right? But
Right.
so I have not put myself on a budget for a good portion of my life. There's been times where I've, been in a financial crunch, and I've had to budget to make sure that I account for everything or make sure that I'm taking care of everything. But then when I've gotten out of those situations, then no, but budget's out the window. So help us understand the importance of having a budget, what a budget, what a good budget looks like for us and our family, and how do we get there?
Yeah. So that's a great point. Budgeting is huge, and today, people do struggle with it. If it's in your pocket, it's going to get spent.
Fair
So
game.
Right.
So
Right.
it's just like you lack a plan, right?
Yeah.
You're not seeing it in black and white. You don't have a plan for that money. If you think about it, everything else that we do comes with instructions, right? My my shirt tells me how to wash it. There's a owner's manual in my glove box. When I get paid, nobody says, "Hey, put your money here, here, and here," right? We just kind of it goes out for rent, it goes out for utilities, and then whatever's left over is just going to Starbucks and entertainment and whatever else, right?
Starbucks
All
will get you every time.
right, all those subscriptions that your Netflix, Hulu, Disney Plus, whatever, like stuff is just going out, right? And you have to see that, you have to visualize it um, on paper. Now, first of all, you got to live within your means,
Okay.
and a lot of times people that I sit down with are pretty much breaking even, right? Um, there are some cases in which you might just need to earn a little bit more income, right? But at the end of the day, I think it's safe to say everybody wastes $25 to $50 a week, right? On dumb stuff.
Easy.
Everybody.
Hmm.
Yeah. So there's room for everybody to save at least something. So like investing for beginners, a lot of people might have the mindset of like, how can I save for the future when I have all this debt, or how much money is enough to retire? What if I started too late? I'm in my 40s. What if then it's too late now? If I die prematurely, what's going to happen to my family? They have all these questions, um, and they wonder if they can ever really be financially secure.
Mm-hmm.
Well, I mean, yeah, the truth is everybody has an opportunity to earn and save money. So you don't have to make six figures to be able to save and get where you need to go. You don't have to have some high level job, good salary, inheritance, lottery, none of that. Um, everyday people can get out of debt. Everyday people can build investments and get on the right track towards financial independence. So, really, there's a few things you got to do first. So,
Mm-hmm.
okay, you got to pay yourself first,
Hmm.
right?
Okay.
You ever heard like the phrase, or when you're on an airplane and like they're going over the safety rules and they're like, if the plane starts going down, whose mask are you supposed to secure first?
Yeah, your own.
Your own, right? So, um, it's the same with finance, right? You will be no good to the person next to you if you are passed out. So you
Right.
gotta pay yourself first and take care of you, and then you can start helping others. Sometimes people have a big heart and they're just, doing everything else that they shouldn't be doing.
Okay.
Second, know your financial independence number. So, and some people maybe listening don't know what that is. Your financial independence number is that money amount that you're going to need from the age at which you'd like to retire that will last you the rest of your life expectancy. This gives you a chance to retire in the fashion that you want to retire in, and to live comfortably throughout your later years. So when you identify that, it's kind of like your destination,
Mm-hmm.
and you can think about it, like a GPS. So you need a plan to get there, right? If I wanted to go to California, I'm not going to hop in the car, head west, hope I get there, right? I'm
Right.
going to plug it into Google Maps. Um, so, people understand logic when it comes to mapping out a road trip, but they don't use the same kind of logic to mapping out their financial future. But it's really the same thing. So identify your FIN number and work with an expert to put a plan together. And it doesn't have to cost anything to sit down with that individual. Um, Hit me up. But and so you want to get a plan put together that's going to show you exactly how to get to that number.
Okay.
So
Okay.
Hmm.
know your FIN. Know your
Okay.
FIN. Also adjust your priorities in your lifestyle. We touched on that. Um, you know, are you taking a trip before you're putting money into your 401, your Roth? There's a way that you can kind of have your cake and eat it too. But at the end of the day, you do, if you want to really think about your future and not
Okay.
greet people at Walmart in your 70s, you
Yeah.
need to be putting
Oh
money.
my God, that is so
Say,
sad. I
say
be
that
feeling
again,
so bad
because
for
we
them.
don't want
Or
our followers at the Walmart greeting.
or
Not at all.
pushing them or pushing capable people in the airport. I be feeling so bad. They had the old people pushing. I almost called them fat, but they get on my nerves. I was
Oh,
like, you need to get out and push that person. Anyway, I'm sorry. I had
right.
a little
No,
rant.
no, exactly, exactly. So adjust your priorities, guys. What's more important, partying this weekend or, saving for the baby's college fund?
Right.
So sometimes you just have to be very, direct, really look at your situation. And then change your way of thinking too. If you think that you're never going to get out of your financial situation, if it's not ideal, then you're going to stay in it. You have to think bigger. You have to know that you can achieve the things you want and go after it. Every little bit helps. So,
Okay. Now, while that sounds like really good, and I would love to be in that place, and it requires some discipline, right? So I know that.
Mhm.
Um, where I feel like I may struggle with or struggle in, and some of our listeners may as well. We like to live and have a comfortable life, right? And so
Mhm.
that's very possible, right? We can do all of those things and still know our fin and pay ourselves and have a plan and adjusting those priorities. Um, and so the reason I say that is one of my priorities that I've actually written down is to pay our home off early, right? So I found
Yeah.
this calculator on the website that allows me to go in, and if I, pay extra on my principal, and it tells me how many years I can knock off, right? Great tool.
Mhm.
The other problem with that, the other big bill that I have, of course, would be taxes, right? Everybody, listen, we're gonna die paying taxes,
Yep.
apparently.
Mhm.
So we got have to work to get that down. But in terms of jotting down, or I guess prioritizing our life, that's probably the biggest thing. Like
Mhm.
what is of
Mhm.
importance to me that I could sacrifice, X amount of coffees from Starbucks a month versus putting this money towards, I don't know, it could become something crazy. Maybe it's another property. I don't know. But I
Right.
think that's the biggest part for me is having to decide, what is of another priority that, I mean,
Mhm.
Starbucks is really hard. I mean,
And
I don't
Starbucks
know
is
about
that's a
that one.
hard
I don't
hit.
know. I know. I'm gonna work on it
That's a
though.
hard hit.
Yeah.
I know my problem. I never budgeted. Absolutely not. I always worked so much till it was just like, hey, it's in, it's out, it's in, it's out, it's in and out. I've gotten better since I've changed tax brackets. And my goal is to be out of the tax bracket because, with where I am financially, I should not be paying taxes anymore. So, me and my CFO, we're working on positioning that because taxes is not going to be a part of my life. They don't pay taxes. Why am I paying taxes? And
Right.
especially with the amount of income that circulates in and out my life. So that's my goal. Like you said, Keisha, to pay off the house. That's what I want to do. I want to pay this house off early. I actually was on the internet looking. I was like, we always there,
Yeah.
looking at the calculator, seeing how I can get things taken care of. And next, my next second thing is not pay taxes. I don't. Why should I work and still have to pay the country to run? That doesn't make sense to me anymore.
Mhm.
And when it comes down to retirement, I don't plan for retirement because I don't plan on retiring. I don't see myself stop. I don't want to necessarily say earning through a secular job, but more of having a continual flow of income. I don't
Passive.
see myself stopping. Now, not just with passive, I want to be able to create an opportunity where, whether it's establishing another business, get that one up and running, boom, that's income. That's, it's not necessarily passive, but it's not necessarily earned either. It's more of just creating opportunities and other channels of income to where I just want to continue to do that until I just don't wake up. And I just don't see myself retiring. I do see myself not being in the United States long.
Mm,
I want to be able to make my coins stretch as far as it can. And my goal has always been to retire in Costa Rica. I loved it when I go there. And I really love the economy. I really love the area. I really love the life. And I like the fact that for every one of our dollars, I think it's like 541 of theirs. I can live off that.
for
Mhm.
sure.
you know so these are like plans that I'm making, and like you said, Ashley, paying yourself. I remember a time where I didn't do that,
Right.
and that's not just in purchasing clothes or anything like that. It's like I never took the opportunity to tithe to myself. I
Mhm.
just always, it was always bills. So it was a mindset change for me to where I'm not going to work just to pay bills.
Hmm.
Those are obligations that I'm going to take care of, but I'm working to establish a final future to where that future can take care of me and I can continue to do what I want to do. And so when I made that mindset change and incorporated a more, I'm going to say with the budget, not necessarily, because I'm not saying I live by a strict budget. I don't. I do know what goes out. I do know what comes in, and I manage it accordingly. I have an amount that goes towards my charitable giving to my church organization. I have the amount that goes to our family for travel and all of that. We have an amount that goes to our investment, and we have the amount that goes towards our business. We have an amount that goes into a high yielding savings account, because these little 0.25s ain't, I'm not with that. You need at least be at 4% if you want to hold my little dollar. So, these are things that I had to change and position. It was like, and like we say, Regal Mindset, changing that mindset to where you see the value in it, because a lot of people don't see the value in budgeting. They don't see the value in saving. They don't see the value in establishing, like when you was talking about the life insurance policies and things like that. They don't even see the value in that. They want to go fund everybody to death.
Or fry fish.
Or fry fish. And I'll buy a fish plate, but I will not go fund nobody. I have to stick to that value, because I feel in certain that I don't mind donating to a particular cause, but it won't be through GoFundMe, because I feel that especially adults, if you can wear a $300 pair of shoes and you can make sure you're in line for the newest iPhone and the newest pair of Jordans, you got the link coming in that you don't reserve your space, and you die without life insurance, that's not my problem. And I'm not going to support that, because you wanted to support a lifestyle, and now you want us to support your end of life. And I don't agree with that.
Right.
I agree completely. I agree with that. And you brought up a lot of good points. So if I can back up, you mentioned something about paying off your house early, right?
Mm-hmm.
Yes.
So here's just a quick tip I thought about. Most people, maybe maybe you don't, but if you make just one extra payment on your mortgage each year, so you're making one additional payment, and you have it applied to the principal, that's important to say, you will pay off your mortgage 7 years sooner and save yourself thousands in interest. Same goes with a car. So it's really those simple things, or you could pay your mortgage biweekly. That also helps as well.
Mm-hmm.
Yeah.
Yeah.
And you could put an extra 50 on that. But yeah. Yeah. That was a lot of
You know
points.
what? Yeah, absolutely, Jay. I was just gonna say, man, you're a lot more organized than I am. I see what comes in, I know what needs to go out, and then everything else is, I'm telling you, it's all over the place. So I got a lot of notes right here.
But
Me and the wife
we
gotta
actually,
really sit down, and we gotta really plan, like you said, the travel, because we both, well, I mostly travel. But we need to have that established. The investments, we need to have that established, so that she and I are on the same page, right? It's usually just me managing or taking care of a lot of things, and it's like she has no idea,
They don't. Our wives don't. They just live in, and we right here crunching numbers, and they living their best life. You know what? Oh, I just had a whole trigger.
Leave them alone.
But believe it or not, I didn't come into this realization. I got it from our spiritual community. Our leader makes sure that we have a financial wellness plan to where we can pinpoint. So there should be any time where it's not about him asking for money to give. He wants to know, where do you stand, so that we can make sure that you're living healthy financially. And that doesn't even matter, because, and just as an example, a lot of people don't understand giving as a principle, because they have a misconception as, oh, that's just a church asking for it. Jewish people don't go to church. They go to their own synagogues, but they have a practice of giving that makes them a successful community. Any philanthropist, Oprah, you name it, they have a standard of giving and generosity that they have and that they follow, which it generates a karmatic experience, which you give, you receive. It's always transaction. So when you get that in your mindset and quit limiting it to a church, then you will understand how to position yourself, because you're giving to yourself. When you're having that budget set aside for your self-care and your, things that you like, you're paying to yourself. The whole travel thing, Keisha, is, hey, if it's not in this 10% of the year budget, we ain't going. You need to make
You
that
said a key
work. We
thing
ain't
though. You
going.
said budget. I don't look if I have to be somewhere, then I have to be somewhere,
Yeah,
and 9 times out of 10, it's not even I have to be. I want to be there. So
yeah,
I have to condition or change my mindset and be more. I won't say responsible. I'll say more accountable to myself and my wife's future planning. Let me say that.
Mhm.
but we share the same communities, and
Yeah.
it's always somewhere to go and something to do. And that's when and even if we don't budget it or just say 10% of my annual income or 5% of my annual income is what we're going to use towards travel. If it doesn't fit in that year, we'll send a gift. And you have to be okay with that,
Whew.
because I was at that point where we always was going. My wife
Yeah.
is in the organization, I'm in the organization. We always going to some and that sometimes, and people supported us, so we support back. If you do, we're going to reciprocate that, but it has to be a limit to the point where you're saying, okay, we have a big goal. Our big goal is to pay off the house.
Right.
So then, therefore, if I have to take care of extra payment of a $2,134 for my mortgage, we're not going somewhere, because our goal is to get our biggest good debt out the way,
Yeah.
and so forth and so on. So that's what my ideal of budgeting, because I know me and my good ADHD, there's no pen paper that's going to tell me to write a line item. I have 15 books over here. I tried it. I even told my wife, I said, I need an iPad. Because somebody on TikTok said, if I get an iPad, I can get this budget app. She went and got me an iPad. And guess who used that iPad for the past year?
The
Her.
baby.
I
Oh,
I don't know. We got her phone. But it's like I haven't even picked the iPad up. I don't know the code to get into it. I don't even care. So I know my limitations.
Mhm.
So I budgeted based off of a numeric value.
yeah.
This is our number.
Right.
If it goes outside number, we'll do it a case by case basis, because you might have to run out of time for a family. You might have to do something.
Yeah.
But this is our number. Same thing when it comes down to our monthly budget. All right, if our monthly budget is $7,000 a month, our goal is to get it down to $6,000 a month within the next year. How can we make that happen? Then we need to get it down to $5,000 a month. And so these are our goals, and then we, I guess, build out how we're going to handle it around that.
Mhm.
And that's just it. Because the word budget, like, I can't take it. Oh my God, you're
Right.
hitting me in the face with it.
Yeah. And I'll also add that we're gonna have to both be on the same page. Like I never see, what my wife brings in. I never ask her. It's not even I ain't gonna say it's not my concern. It's just not, I just don't care.
Yeah, you're right. It's like, because I mean,
Don't care.
I know in our household, we take care of pretty much everything. My
Yeah.
wife doesn't go anywhere. I mean, she goes places. She outside now, but I pay her out of our business expense. So which helped me on our tax situation, for the
Okay.
fact that I was able to claim that towards the tax and bring it. Let me tell you, boy, I was a little shook when she sent me that first number. But yeah, I was shook. I was like, no, we got to readjust something. But she handles our business side, our personal business sides, while I'm handling the W-2 side.
Okay.
And so it makes sense. When she get her little coin, she don't she may come here with me a cup of Starbucks. She don't care about me like that when she get paid. She don't care.
That's good. That's good. That's good. So based on what we were just talking about, Ashley,
Mhm.
do you have anything else that maybe you can help us or our listeners to kind of keep in mind, when we're planning for our household and for our year, maybe, or anything like
Yeah.
that?
Yes, definitely. So, it sounds like you, Joy, have a lot of things that you've worked on independently. You have some background in finance, right?
I love money.
Okay. Okay. That's a great start.
When I was getting my MBA, of course you had to take it, but it's
Mhm.
all about I love money.
Okay. So you do have some financial background there then. But yeah, most people without that kind of knowledge, that lack of plan, I would like to say you need three main types of accounts, right? The first one is going to be an emergency fund. Um,
Yeah.
this it's recommended that you do have 3 to 6 months of your living expenses that are saved. That way, when the unexpected happens, car, medical emergency, whatever, you have that liquid cash that you can pull from, right? And there are plenty of accounts that can grow at rates of 4 to 6% interest and still give you the quick liquid access. You want to have a short term account. Now, these are for your short term goals, right? Things like a down payment for a house, right? If you're trying to save up for something, then you need an account that's going to allow you to do that. And then you need a wealth building account. So this is something that's going to give you the opportunity to retire. This is more long term. These are the things that you can put aside, like how do you want to leave a legacy? Your charitable giving, that type of thing. So you really have to have all three functioning at the same time in
Mm-hmm.
order to truly, because in the event of an emergency, for example, if people don't have cash set aside, what are they going to do? You know, Swipe a card, take out a loan, you go further into debt. The only way to break the debt cycle is to have liquid cash on hand, right? And sometimes people get so far into the debt trap, right? Um, that you might be thinking there's no way out, but for those people, there is. Consolidation could be an option. There's all kinds of different strategies that financial professionals can help with,
Mm-hmm.
um, that show
Mm-hmm.
you how to get out of debt faster, save you years of being in debt, and lots of money and interest. Um, I'll just share real quick. So there was a point in time when I was on track to be in debt until I was 121. Okay,
Mm.
so
Wow.
what I did, right?
Wait a minute, that's a life sentence. What are we doing?
Exactly. So I put together my own financial plan, and used some debt stacking strategies, stuff like that. And we'll be out of debt in my early 40s. So not too long. So I mean, there's hope, for everybody. I think
Mhm.
avoiding it, is where I tend to see people have the most struggle.
Okay. So
Yeah.
you
Hmm.
said something that was interesting, Ashley. You
Mhm.
said debt stacking. Can you
Yeah.
help us understand what that is?
Yeah, so it's similar to the term debt snowball. If you listen to Dave
Okay.
Ramsey and you've heard him talk about that, really you just kind of tackle one debt at a time. So let's say I've
Okay.
got I've got a mortgage, a car, and 3 credit cards, and maybe student loans. Well, through debt stacking, we can determine which debt is going to get paid off first. And then instead of taking that $50 I was putting on that credit card, and that $50 going back into like my normal savings account, I'm going to instead apply it to the next debt. Um, and the great news is I don't have to figure that out. But through sophisticated like software, we can
Okay.
determine debt stacking strategies that help you take years, and thousands in interest off of debt.
Mm.
So
Okay.
you pay something off, you take that money, apply it to the next. So
Okay.
you have an extra 50 on that one. Then when that's paid off, you take that 150, put it on the next, and so on.
Okay. Another
Okay.
transparent
Makes
moment.
sense.
I'm
Mhm.
so sorry. And
No.
this may be a very bad habit, but so I
This is
have
the same space, safe space.
have more than 3 credit cards. So I have a few that I rotate, right? They all give me something back, right? I don't use a credit card unless it gives me something back, right? So I'll
Mhm.
rotate
Mhm.
a number of cards, right? And so my intention or my goal is to pay them all off, right? So they're well below
Mhm.
20%, right?
Mhm.
However, by the time one gets close to 20%, then I feel like there's something else I need. So I gotta run that one back up. So and it just does this whole little rotation thing. So it just never works.
Hmm. Yeah. So, and that's
That's
a
the
lot
main
of
thing. I
people.
gotta get out of
Let me ask, like, are you seeing a lot, if you were to compare side by side what you're
that.
paying for that interest
Uh-huh.
and what you're really getting back in rewards, are the rewards greater than what you're paying in for the interest?
I'm gonna be honest, I couldn't tell you what the interest look like because I don't even think about that. I just know this got to go in a rotation, and
Mhm.
I never look at the interest. Like I don't even care what the number is.
Yeah.
It
That is a
it's
really
def
bad.
it's a recommendation that if you can pay off your card each month,
Yeah,
that's not a bad thing because obviously you're avoiding the interest.
right.
But any interest that you're paying, most credit cards are uh, 25 to 29 or 30%. That adds up quick.
Yeah, I don't know that the rewards
Get some water.
offset that. I don't know that they do. I just
Mhm.
maybe it's just a thing that it makes me feel better that I'm
That's a
getting something while I'm spending because I gotta spend it anyway, right? Well, I don't most times I have to spend it anyway. So I feel like if I'm getting something for it, then that makes me feel better.
right. I did that, before. I had a card and it was like travel rewards. I love the travel, right?
Get her some
Uh-huh.
water.
And those points did not add up. I had like
Can you
$20,
get her some water?
but I had like 6,000 on the credit card. Like I could
Ah,
have used 3,000 and gone on a trip, you know.
Mhm.
So
gotcha.
it,
Gotcha.
yeah, I would just take a closer look. Usually, at the end of the day, a credit card is not the best way to go.
Right.
Now, if you are putting it into, if you have your cards paid off and you want to build up and accrue money, that's where I would look at that short-term fund, build
Okay.
up towards that trip or whatever the points we're going for, build up another way.
I don't know that I have a goal for the points. I think it's yeah, I don't have a goal. Okay. So yeah, I definitely need to reach out to you, Ashley, because apparently I am a hot mess.
No, you're not a hot mess. Now no, you're
Man,
definitely not that. It's just I get it, and I get what you're saying, but I think it is definitely helpful to have that professional eye to
yeah.
go in, see where you can make the tweaks necessary,
Yeah.
because you want to make sure that you're doing right by your credit cards and things like that, because that was a lesson that we didn't learn growing up.
Right.
True.
you know
Absolutely.
and so now is the time to get into that, because like even with my plethora of kids, um, one of them called in the middle of the night, was like, I got a credit card. And I said, well, all right, let's have a credit card conversation. How much is this? Let me explain if you pay it, what's the due date versus the posting date. Like, let's go through all of
Safety
that.
date.
What's
Yep.
going to happen? I remember I had a conversation with my oldest son when he wanted a phone. Cricket never dropped nobody. You young, you a kid, you can go get a Cricket or a Metro. Oh no, he wanted an iPhone. I said, if you get an iPhone, I'm not putting one in my name for you because you're still young. You get one, this is what you need to do. They're gonna run your credit, took all that. It wasn't even a good 3-4 months later. The bill with, I think who was with Verizon, was $200-$300. It done double. And now you don't impact your credit in a negative way because of that phone. But I gave him the phone talk when you go to put things in your name. And so in education, you want to be able to, one, help your family through that process. And then as we're helping our family, we also need help because we're on a different scale of credit and responsibilities that people like Ashley can help us with and walk
Yeah.
us through that to make sure that we're getting the best value out of everything that we're doing, understanding good debt versus bad debt,
Hmm.
understanding how it impacts us overall. So yeah, everybody needs help. A
Yeah.
therapist needs a therapist.
Yeah.
Counselor needs a counselor. A life coach
Absolutely.
needs a
I
life
like
coach.
that.
Yeah.
Like that. Okay. And exactly. And anybody that, let's say I were to sit down with, if I sit down with somebody and they are already doing all the right things, guess what? You can just be assured that you're doing all the right things. And I would tell you that, right?
Okay.
So but if I sit down with someone and there's room for improvement, then we see what that looks like.
Okay. Okay. Perfect. Perfect. I will say is there's a question, and I don't know if that you can answer it. It's something that Jay said. So I do have some kids as an authorized user to on my credit cards to help them build their credit because they don't have any credit. Is there any downside to that or any negative impacts to that? I mean, they don't even have the cards. It's just really literally to help them
Yeah, I wasn't getting in the
establish
car.
credit.
Heck no.
Right. I mean, if you're doing what you need to and using credit in the right way, then that's probably beneficial to that person, would be my guess.
Okay.
Mm,
Okay.
yeah.
I think because I remember my grandma, she did me like that, and I didn't know what she was doing. I spent that card up as quick as it hit my hand. And yeah, so if you're gonna release that card to them, you got to have that conversation. Like, dude, this affects me.
Yeah. Yeah. No,
But I
we
think it's
we
something healthy though, to
yeah.
help your kid in that way.
Yeah, absolutely. Absolutely. No, we had to talk that, if they needed help, certainly yeah, I didn't mind. And the cars, remain here at the house. To be honest, I don't even know that they're activated. I just know that to remind them, every other month or so, just to, check to make sure that their numbers are good or credit scores are good and in accordance to what it is that they need it for.
Right.
Um, so we're almost wrapping up here, but I did want to go over another thing that I feel like is going to be also beneficial for our customers or our end users. Some sort of ratio, right? So again, I hate to refer to TikTok, but there are some good things from TikTok that I have learned as well. And we talked briefly about it earlier. So some people live by like a 70-20-10 rule or 70
Mhm.
15 15 rule or 80-20 rule or so on and so. Do you have a recommendation of what percentage we should be allotting for household things and savings and other stuff? Do you have
Mhm.
that kind of a percentage that you could share?
I say the first two most important bills are your rent or mortgage. You need a place
Uh-huh.
to live, and your life insurance.
Okay.
After that, pay for everything else, and then I say save almost everything else. Now, some people's expenses I can't give a ratio,
Okay.
because everybody's situation is different. There are people that literally 95% of what they bring in has to go out for living expenses. In
Mm,
that case, save the five. um, you know, um, and that's where I was talking a little bit earlier about some people just need to earn more income at the end of the day. Like
mm,
there was a recent study that came out, a single person to live comfortably in the state of Ohio now needs to earn six figures. And
Wow.
a family has to earn 200,000 plus. Um, it's kind of crazy, you know? So
wow.
You got to
I
get rid of them kids. Mm-mm.
So yeah, it's not a one size fits all. It's
Right.
very specific, specific to a family.
Right.
So it's kind of the majority of what's left over should be put away.
That's sad because it's like they're making you choose to overwork yourself to the point where it could be emotionally, mentally, or physically damaging. Is or choose what type of family lifestyle that you can afford.
Mhm.
They're also making you choose, um, I guess I want to say happiness in a sense, because what if you want to live in that area, but you can't because you can't afford that area?
Mhm.
Now, something TikTok did tell me was that this young lady, she got in there, she said, after, like, for example, Chicago, is it more expensive? But then it may be a city right outside of Chicago where the cost of living is cheaper, where they was like, all right, well, we make Chicago money, but we live in
Mm,
this area, in order to compensate for it. And even in Maryland, right now, the poverty wage is $50,000 to $60,000 a year. That's considered poverty in the
Mhm.
state of Maryland.
mm,
And And it's like to some people, $50,000, $60,000 a year is big money to them.
Right.
But you're considered in poverty in the state of Maryland. And that's sad. So it's like you're gonna have somebody go out there and get multiple jobs, or like you said, that old person at Walmart, because they can't afford to live off of that Social Security that more than
Mhm.
likely will not be in existence when we're ready for it. Because now they're pushing us what past 65 to in our 70s to retire.
And I mean, that won't, Social Security is not even going to be around for a lot of us. So
Mm-mm.
that's, and that's something that's out of your control. And it is unfortunate you have to adjust, your living situation or your lifestyle sometimes in really dramatic ways, just to
Right.
get by. And it sucks that people have to choose between, time and money. You said, running yourself in the ground, working all the time, um, to maintain your household. Um, but there are some opportunities out there that, will eventually, with some hard work, give you freedom of time and freedom of money, you know?
Mm.
Um, and if you'd like to know more about that, you can hit me up. Uh, so
Yeah, we need your details. Let's call out those details. Even though you put it in your space under your name, some people are not gonna read. Let's just
Mhm.
be honest. So let's call it out for them so they know how to reach you, how they can, take advantage of a discovery call consultation. It's
Mhm.
initially free, but if you want her services, she do charge. Um, Make sure you invoice them because all information ain't free. What is
So,
your information, Ashley, for us?
so, so my email is ashleypyoung85@gmail.com. And yeah, I can sit down and meet with anybody. There is no charge for just sitting down and receiving a financial plan with education. Costs nothing but 20 minutes of your time. Um, and then, I am hiring too. So if you
Okay.
if
Come
you're
on now, you better pitch it.
if you're interested in a work opportunity, what we do, this is what we do. If you've been watching the show, we help people in multiple areas of finance. And I do need those client facing roles where you would be sitting down, meeting with our families, assisting them with their needs. So, kind of like on an advisor capacity. But I also need some people that I can develop into a leadership role where I can help you, get you to the point where you're trained and able to do interviews, um, the hiring, the training of new people, and help run and operate an office.
Mm.
Oh,
Sound like a
that's
boss.
beautiful.
Okay. Yeah, I love it.
She's giving you a way to get extra income.
Okay. Okay. That part. That part, that part. Well, listen, I just want to say again, thank you, Ashley, for taking out time on your Friday evening to sit with us and
Absolutely.
have this conversation with Joy and I and our listeners, and helping us better understand the importance and significance of budgeting, the
Right.
investing part of it, the insurance part of it, and just really making or creating a plan. And you've given us your points of contact, so I can say that for me, because I also want to walk in this same walk that we encourage everyone else to, in a regal mindset. I'm going to reach out to
Mhm.
you, and you and I are going to set some time aside. Now, can you also share with us what is it that we need to have? Like, do I need my pay stubs? I just learned I had a raise earlier this year. I didn't even know. I mean, I just need to get stuff together. I need to
Right.
know what's going on.
Yeah. Okay. That sounds great. And thanks for having me on the show again. And I'm happy to sit down and meet with both of you and anyone else listening. But yeah, you would want to bring your, whatever your take home pay is,
Okay.
know that amount,
Okay.
um, statements of debt. So anything that you have that has a remaining balance
Okay.
with a minimum due interest rates,
Okay.
those are important. Copy of current life insurance policies, any 401k, IRA, any other investment accounts that you've got. And yeah, I would typically ask for those to be emailed prior.
Okay.
So I can actually send you a list of everything so
Okay.
that
Yeah.
you know exactly
Oh,
how we,
that'd be great. We could post that.
yeah. Okay.
Perfect. Jay, did you have something else? Any other questions or anything you wanted to ask, or Ashley?
No, this has been absolutely informative. Take advantage of the opportunities, the resources, the information so that you can be successful in your life and make sure that you're being successful in your family life. Let me tell you something. The real flex is making sure that you leave a good foundation for your family when you pass and also while you're living. So you have this young lady, Ashley Young, that is availing herself to help you establish that life that you quote unquote trying to flex on TikTok. She can help you live that life for real. You ain't got to
Right.
flex. We know you broke, and that's fine. But she can help you. She can unbroke you.
I can.
She
Thank
can
you.
unbroke you. It takes time and patience, but she can unbroke you. That's
Absolutely.
it.
Ashley, anything else you want to share?
I don't think so. Thank you guys again. I'm looking forward to, hearing back from some, plenty of people.
Okay, perfect, perfect. All right. Well,
Absolutely.
listen, that's all that I have for tonight. Again, keep a regal mindset, and until next week, we'll talk to you soon. Uh, you know what? I apologize, but it's almost
Uh-oh.
Pride, so y'all be safe out there in those gay streets. Okay.
Listen, be safe. We know
Be
how
safe.
things, our climate, be safe.
For
Go
sure.
out with a friend and somebody be responsible.
Yeah.
Live another day. That's it.